How you doing, Shelly? Good to see you. First one in today. Well done. How you doing? Hope you had a great day. T, good to see you. How you doing? Hope you had a great day as well. Hello, Miles. Comatose, good to see you. How you doing? Hope you had a great day as well. Ray, good to see you. How you doing? Hi, everyone, brother. How's things? Pin the live show quick. Okay, live show is pinned. Okay, let's do intro, disclaimer, what we're going to talk about tonight's live, and then we'll go straight to the first news, essentially. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 461 of the CMF Live show everyone's watching right now. Now, these are the topics we're going to be going through on tonight's live. Let me just give you a little bit of a breakdown. By that time, everyone should be tuning in for the first part of the news. We're going to be talking about essentially the crypto market space of essentially what's happening right now in terms of Bitcoin's price, the rest of the crypto market space, and with the war scenario still going on. Then we're going to be talking about essentially the American essentially perspective of the crypto space in terms of their regulations that are, hopefully soon going to be coming through. We're also going to talk about tonight's live show regarding essentially Wall Street giants, giving some sort of strong signals of where they're possibly going next, down which path they're going, essentially. So that is digital world that we're heading into. Then we're going to talk about essentially Coinbase navigating essentially this regulatory pressure that they're going through right now. Then we're also going to talk about tonight's live show regarding the European central banks, who are essentially taking another step inside of this digital world in terms of CBDC, stablecoins, and so on, in terms of the euros. A digital euros essentially. Then we're going to go through news on tonight's live show regarding trading platforms and AI coming together and essentially how AI is revolutionizing everything around us as we know it. We're also going to talk about tonight's live show regarding the SEC as well, in terms of the SEC approving the NASDAQ to move forward into tokenization, essentially, which is one of the biggest things to happen possibly ever in Wall Street. Then we're also going to go through news on tonight's live show regarding Visa and their newest, essentially, business partnership inside this blockchain sector. We're also going to talk about tonight's live show regarding the United Kingdom and Iran and the US and Israel and so on. We're also going to talk about tonight's live show regarding China in terms of their yuan, their digital yuan, and what steps they've taken so far. We're also going to talk about tonight's live show regarding essentially XRP partnerships and Ripple partnerships, as well as we always do essentially on tonight's live show. Now, before we go through any of those news topics, we'll quickly go inside the comment section, just see what's happening there. And then we'll go straight into the first news, which is regarding essentially Bitcoin's price point. By the way, thank you so much to everybody who has straight away liked and retweeted this live show. If you're watching this on X, thank you so much to everyone who has liked and retweeted this live show. If you watch this on YouTube, thanks so much to everyone who's also liked the live show as well. I'm hoping everyone joins in today because tomorrow we might not do a live show. So I'm hoping everybody from the CMF joins in tonight. At least they can enjoy the live show because tomorrow is essentially going to be the Persian New Year, which means I'm going to be spending time with my family. In most cases, I won't be able to do the live show tomorrow. So hoping everyone tunes in today, essentially. So CMF members, like and retweet this live show. Let's get it out there because we might not do a live show tomorrow, but obviously we'll be back on Monday doing a live show again, Monday to Friday as usual. But tomorrow is the Persian New Year. I didn't take the day off on the beginning date of the Persian New Year because I just wanted to take the day off and the actual Persian New Year, which is on the March 20th, essentially. Now, let's see where we were at inside the comment section. Scott, good to see you. How you doing? Good evening, Miles and CMF. Bull XRP, good to see you. How you doing? Good evening, Miles and CMF. Free and Forever, good to see you. How you doing? Good evening, Miles. How you doing? I'm doing great. Callie, good to see you. How you doing? Now, Bitcoin stabilizing near the $69,000 aimed global essentially commodity volatility. Bitcoin demonstrated essentially relative resilience still till this date, maintaining its position around the $69,000 level, even as broader essentially commodity markets experience significant turbulence still with the wars going on. While gold prices saw a sharp decline and crude oil even spiked up due to ongoing geopolitical tensions, the digital assets stayed within the consultant essentially range. This price action essentially suggests a decoupling from traditional safe haven assets as market participants weigh the impact of high energy costs against the steady demand essentially for decentralized settlement layers in the 2026 global economy. The current market environment has prompted essentially a cautious outlook from several leading financial analysts. Commodity divergence. The drop essentially in gold and rise essentially in oil has created a complex backdrop for inflation essentially hedging and strategies, leading some essentially to view the ledger stability as a sign of maturing financial planning. It seems like the only asset right now that's doing pretty damn well in a war scenario is the crypto space, and Bitcoin is still holding its ground. I've explained why Bitcoin is holding its ground due to this war because of the amount of money laundering that's happening. But, in this sense, it's being shown as a positive, to be fairly honest. And money laundering is never a positive thing, just to point that out as well. Geopolitical risk premium. Rising energy prices continue to put pressure on the essentially cost of securing network and potentially impacting the long-term stability of smaller scale participants. Wait and see approach. Experts are advising a neutral stance, suggesting that investors remain essentially on the sidelines until the national essentially financial infrastructure absorbs the latest wave of macroeconomic data and clarifies the path for future interest and rate adjustments. As the 2026 digital economy essentially navigates these conflicting essentially signals, the focus essentially remains on whether Bitcoin can transform its current stability into a definitive move towards new highs. The lack of a clear trend in either direction indicates a period of accumulation and revaluation by institutional essentially allocators. Moving forward, the interaction between global resources and scarcities and the efficiency essentially of digital on-ramps will likely determine if the market can maintain its current footing or if the broader essentially correction is necessary to align with the shifting and realities of international commerce. As I mentioned yesterday, there are a few things that Bitcoin is not doing too well on. Due to the energy crisis, Bitcoin mining operations are definitely feeling the pressure around the world. Energy prices are definitely rising ever so slightly due to the Strait of Hormuz being closed because of this war. According to Iran's essentially information, that the Strait of Hormuz is open, but not to their enemies. But essentially, it's really not an all reality. Iran is trying to bully the world by trying to keep the Strait of Hormuz, fairly honest. And more countries like the US should stand up to them. And the only reason that we are feeling the pressure of these energy crisis situations in the West, in Europe especially, is because our European leaders are too weak to stand up to Iran, because if they weren't so weak, to, essentially, they could have stood up and backed Donald Trump and opened the Strait of Hormuz. You see, the US isn't feeling the pressure as the majority of the West essentially is right now, because the US has a massive oil source and they're not going green or trying to go neutral or carbon footprint zero, which the rest of Europe is right now, which is why we're going to be feeling it a lot more in Europe when it comes to energy prices. Even Australia will feel it compared to the US. And when the US, Donald Trump, asked essentially the NATO countries to join and open the Strait of Hormuz, it wasn't a sign of weakness from the United States to tell these NATO countries to join the war. It was a sign of, are these NATO countries actually going to back the United States when the time comes? And every single one of them said no. And they bowed down to the Islamic Republic of Iran. They pretty much bent over for the Islamic Republic of Iran. And that's why we're going to feel prices even more as we go along, because unfortunately the leaders that we have in the West are extremely weak and they're spineless and they're cowards and they essentially bend over for the Islamic Republic of Iran, but they won't back essentially their NATO allies. And as long as energy prices slightly, ever so slightly rise, that will put pressure on Bitcoin. The reason why that will put pressure on Bitcoin is because Bitcoin essentially mining facilities need energy to mine Bitcoin and pretty much maintain the network. If energy prices start rising, then we can expect the hash rates to even drop, which means that wouldn't be too good for Bitcoin also. And I just want to say one thing. Uh, The faster essentially, this Strait of Hormuz situation, the Iran war finishes, obviously the better it is for the market space. And the faster we get regulations, the faster we can move away from Bitcoin. So maybe that could be, the point that we need, essentially a Clarity Act or a Genius Act, because then none of this energy price hike situation on Bitcoin wouldn't matter at all. But for the time being, it is holding its ground. Now, on the topic of essentially a Clarity Act, a Genius Act, which is what we need to pretty much decouple from Bitcoin's footsteps, the American public and digital markets demand regulatory clarity, is what we're going to talk about next. A growing essentially of advocates are essentially calling for a definitive shift in how the United States governs digital assets, arguing that the current regulation by enforcement approach is no longer sustainable for a modern economy. The core of this argument is that innovation is being stifled by lack of clear rules, leaving both retail investors and major institutions essentially in a state of uncertainty. By establishing a transparent legal framework, the US can ensure that its national financial infrastructure remains competitive on the global stage, providing a secure environment for new technologies to flourish without the constrained essentially threat of unpredictable litigations. The push for legislative action centers on several critical needs for the evolving financial landscape. The defining jurisdictional essentially boundaries. Clear legislations would finally resolve the tug of war between essentially various federal agencies, providing a stable essentially rules for essentially the crypto space that allow businesses to operate with confidence. Also protecting consumer interests, a formalized system that would mandate the same level of disclosure and transparency expected in traditional essentially markets, reducing the risk of fraud and systematic failures that have plagued the industry in the past. Fostering essentially domestic innovation by providing a predictable path for compliance, the US can prevent the exodus of talent and capital to offshore jurisdictions, ensuring that the next generation of financial tools is built within a regulated American framework. As the debate essentially intensifies between Republicans and Democrats and the banks and the crypto CEOs, the focus remains on whether Congress can deliver a baptism solution that balances the need for the growth with necessary, essentially with necessity over oversight. Many believe that the window for the US to set a global standard is closing as other regions implement their own comprehensive digital asset laws. The ultimate goal is to create a resilient system where the underlying technology can be integrated into the broader economy. By providing essentially the efficiency and security required for the future of international commerce and finance. Still, we have the debate of Republicans versus Democrats, crypto CEOs versus the banks. They're all still, essentially going at each other's throats on what should be passed for the crypto space. And what essentially is at stake right now is the rest of the world not only has started to catch up to the stage that the US is in right now in terms of the crypto space regulations, but some jurisdictions are starting to overtake the US market space in terms of the crypto space. And that's not good because we want the biggest market space to be the number one leader, not essentially a Middle Eastern country or essentially an Asian country or another Western country in Europe or so on. We want the biggest market space to be on board because if they're on board, everybody else is pretty much on board. Now, Wall Street is what we're going to talk about next on tonight's live show. But right now, there is a massive demand for those regulations to be passed because they're saying the window for regulations is about to close if the US doesn't move fast enough. Wall Street giants signal a strong interest in Falcon X and initial public offerings. A lot of blockchain companies are starting to go essentially IPO and raise quite a lot of money. Cantor Fitzgerald and the other prominent essential investment banks have reportedly begun pitching Falcon X, a major digital asset prime brokerage, on a potential initial public offering. This move essentially indicates a significant shift in how institutional essentially finance views infrastructure of digital economy by moving away essentially from cautious observation towards active participation in the public listing of essentially specialized service providers. By engaging with a firm that bridges the gap between traditional capital and decentralized markets, these financial institutions are positioning themselves to lead the next wave of high utility corporate transitions. The interest from major investment banks underscores the growing maturity of the industry's underlying essentially financial plumbing. Institutional grade brokerage. Falcon X essentially has established itself as a critical on ramp for professional investors, providing the execution and liquidity services necessary to navigate the complex global settlement layers. A successful IPO would serve essentially as a benchmark for transparency and stability standards often discussed in modern regulatory frameworks, proving that the digital native firms can meet the rigorous demands of public, essentially, market oversight, and that the potential listing of a prime broker highlights the integration of an automated trading and credit services into the broader economic landscape, further eroding the historical, essentially, barriers between legacy systems and modern ledgers. As discussions essentially progress, the focus remains on the timing and essentially valuation of a potential debut in the public markets. Analysts suggest that the involvement of a top tier banks reflects a broader trend of flight to quality, where essentially only the most resilient and compliant firms are considered for such a high profile exits. If Falcon X moves forward with an IPO, it will represent a landmark essentially moment for the 2026 global economy, providing essentially a clear sign that tools and platforms also essentially supporting the digital asset sector have achieved the scale sophistication essentially required for a permanent place in the world's financial architecture. A lot of firms, essentially blockchain firms, are being approached by behemoths inside Wall Street to go IPO. It's also a good sign, I'll be honest. We've got word that institutions are becoming diamond hands inside the crypto space. Institutions essentially are pushing for IPOs inside the crypto sector. Institutions essentially are holding huge amounts, vast amounts essentially of Coinbase shares or any other shares. So even though there is a tug and war situation, is what's being described right now between the crypto regulations, between Republicans and Democrats and crypto CEOs and banks, there's a tug of war situation. At least Wall Street seems to be on board with pushing the crypto space further essentially into the right direction with IPOs for some firms that want to go IPO, and also essentially for the idea of, walking away from this mentality that they used to have, which was that's a gray area, we can't touch that. It all does tell us that, how close we are to those rules and regulations. Otherwise, these Wall Street firms wouldn't waste their time, all their money, all their resources trying to push these blockchain companies to go IPO. Now, Coinbase is what we're going to talk about next on tonight's live show. Coinbase essentially has navigated essentially regulatory pressure with potential stablecoin revenue loophole. So we all know, as I was essentially was saying, regarding the tug and war situation of the rules and regulations, one of the biggest factors is that the banks don't like the idea that people can earn essentially yield on their stablecoins. The banks hate that because that would make a lot of people take their money out of the bank and put it towards stablecoins like USDC, RLUSD, USDT, and the list goes on, for example. And that will cause a bank run. The banks won't be able to provide essentially mortgages, loans, and so on because they don't have the profits that they used to have to offer these services. And that's why the banks don't want yield on stablecoins. But then the argument essentially for the crypto firms is, well, that's our benefit. We can offer this service, and on top, we can offer essentially loans to people by using their assets as collateral. And maybe somewhere down the line, we could also offer them mortgages. And that's the argument between the banks and the crypto CEOs, or the crypto CEOs that are turning their firms into some sort of neobanks. But Coinbase is trying to find, or has found, a loophole in some way to offer yield while this tug and war rules and regulations is still happening between Republicans and Democrats and in Congress in general. Coinbase is currently confronting essentially a significant legislative challenge in Washington, D.C., that threatens a substantial portion of its annual income, particularly concerning its involvements with stablecoins. Lawmakers are scrutinizing the interest sharing arrangements between digital asset platforms and the issuers of a dollar pegged tokens, potentially classifying these earnings as unregistered securities and offerings. If a multi billion dollar portion of its revenue is restricted or reclassified, the company could face a drastic shift in its valuation and operational model within the 2026 digital economy. However, legal analysts have identified potential rewards loophole that might allow the exchange to protect its financial plumbing. Incentive-based, essentially, reclassification by essentially reconstructing revenue as user rewards or loyalty incentives rather than direct interest splits. The platform may be able to bypass certain restrictions of essentially the US Clarity Act, decentralized essentially distribution models, moving the settlement layers for those rewards further towards an on-chain non-custodial mechanism could argue against the traditional essentially banks. The firm is actively engaging with policy experts to ensure that any new national financial infrastructure maintains on ramp for stablecoin innovation as envisioned by the broader goals essentially of the Genius Act. Well, the banks are still arguing the point that, why are firms like Coinbase still handing out essentially insensitives, where people storing their USDC with them and then earning yield on top. The banks are not happy about that because, the regulation hasn't passed and it's being used as a gray area essentially for Coinbase. But they're saying once that is passed and you can't offer yield on stablecoins, what about all the money that Coinbase has been handing out over the years? Well, as you all know, there's always a loophole in every law, and all Coinbase has to do is change it from yield on top of your stablecoins to user rewards or loyalty cards or gift cards, and then it's legal. The outcome of this regulatory standoff will likely determine the future of probability of centralized on ramps in the United States. While the threat of unconditional surrender to restrictive new laws remains a concern for shareholders, the discovery of a viable technical loophole provides essentially a potential path forward for maintaining high utility services. As the 2026 global economy continues to integrate these digital tools, the focus remains on whether the legal system will adapt to these nuanced reward structures or implement a total banking blockade on shared revenue models. I'll be very honest, the banks have been playing dirty for a very, very long time. A very long time, the banks have been playing dirty, and especially against the crypto space. They weaponized Gary Gensler and the SEC to go after crypto firms to slow down their progress. Then they weaponized essentially the FDIC to make the banks not work with crypto spaces or even retail sections inside the crypto sector. They weaponized the OCC. And then obviously when Trump came into power and Gary Gensler lost his position, the banks lost a very big pawn inside of their chessboard, essentially, you could say. So for the longest time, the banks have been playing dirty. So why not essentially for Coinbase to use loopholes to their advantage and play at their same level? If they don't want to give crypto firms essentially, or crypto firms like Coinbase, Kraken, Crypto.com, Ripple, for example, if they don't want to allow them to offer some sort of yield on top of their stablecoins, then just change the wording. Because if the banks can't play by the rules, which they can't, and they've been fined multiple times, I'm not saying the crypto space shouldn't play by the rules either. What I am saying is what Coinbase can do is actually a very legal method. It's not illegal, it's very legal. It's a gray area on paper. It just always depends on how much you tiptoe into a gray area when it becomes borderline illegal and a massive fine. So I'm not telling any of these firms to break the law in any sort of a way, but it's a path that's been suggested, not my path and not my recommendation either, but it's a path that's been suggested right now that maybe, these firms, these crypto firms, can still offer yield going forward, even if it's not prohibited inside the regulations that are going to be passed. They could just change the name to gift cards if they wanted to. Now, European central banks is what we're going to talk about next on tonight's live. So, European central banks are recruiting essentially experts to bridge digital euros with physical infrastructure. I'll be very honest, they don't need to look too far. There's a big blockchain company worth over $50 billion in valuation. It's called Ripple. Honestly, they don't need to be hiring engineers or looking into all these small blockchain firms when you have a behemoth inside the blockchain sector. The European Central Bank is actively seeking industry specialists to facilitate the integration of digital euros into existing physical payment hardware, such as, for example, ATMs and point of sale terminals. This initiative represents a critical step in moving the proposed central bank digital currency CBDC from a theoretical, essentially, framework into a functional tool for daily commerce. Now, you know what's interesting about that? About a year ago, the European Central Bank said that they're not interested in retail CBDC. That was their selling point. Europe said, we are not interested in CBDCs for the retail section, but all we care about is wholesale CBDC. And I said, that is a load of BS. Because the reason why they decided to do wholesale CBDC first is not because they care about the retail section's privacy, it's because they learned from China's mistakes. China launched CBDCs in general and then realized people couldn't spend them in most places. So then they started getting companies, Chinese companies on board to start accepting CBDCs. So the Europeans learned from the Chinese mistakes and decided to introduce wholesale CBDC first. So all the institutions around you accept CBDCs, and then retail CBDCs will come, is what I said. But according to Europeans, that's never going to happen. Retail CBDCs out of the picture, never going to happen. Well, you fast forward to 2026, March 19th, today, where now the European Central Bank is saying, no, no, we're going to still do retail CBDCs, and we're actually hiring more people to do retail CBDCs. It was never going to go away in the first place. They just pretended that they didn't care about it. It's not really a big deal. We care more about the institutions when it comes to CBDCs. In all reality, they were just trying to figure out the points. By focusing essentially on hardware layers, the European Central Bank aims to ensure that the digital currency is compatible with the machines people use every day, providing essentially a familiar interference for major technological shifts in the Eurozones and financial landscapes. The recruitment of these experts highlights several key objectives for the modernization of European payment systems. Hardware interoperability. The project seeks to develop standardized protocols that allows existing card terminals and cash machines to process digital euro transactions as seamless as traditional banknotes or debit cards. Offline functionality. A major focus of technical integration is ensuring that digital currencies can be used in environments with limited connectivity, maintaining the reliability expected of primary essentially national payments and methods. By embedding the digital euros into the current frameworks of ATMs and other essentially daily usage that the retail section uses, the European Central Bank is working to ensure that all citizens, regardless of their technical essentially proneness, have a clear path to accessing the utilizing the digital euro format. So we went from the European Central Bank and euros in general, Europe in general, saying we're not interested in retail CBDCs, to now saying everybody should be using retail CBDCs. It's almost like we never saw that coming. That's British sarcasm, by the way. As the project moves into this technical phase, the focus remains on balancing the convenience of digital payments with the high standards of security and privacy required for sovereign essentially currency. Analysts view this move as an effort to future proof the region's economic architecture, ensuring it remains resilient in an increasingly digitalized global environment. Successful integration would mean that the digital euros functions not just as an online payment option, but as a comprehensive replacement for legacy cash systems, fully embedded into the physical world of retail and banking. So, Europe has went full CBDC mode. They went from we're not going to do retail CBDCs because we care about the privacy of the retail section to now everybody needs to be on retail CBDCs. I said this was going to happen a long time ago when they first mentioned they're not interested in retail CBDCs. Now, moving on from Europe and retail CBDCs to trading platforms. Trading platforms have accelerated AI development as industry braces for further job displacements. A lot of people are going to be losing their jobs to AI. It's a discussion that's been discussed on many panels, on many podcasts, that AI is eventually going to replace every job. The jobs that would still exist for the longest time are going to be blue collar jobs, whereas white collar jobs are all going to be overtaken by AI. In terms of lawyers, in terms of essentially even doctors and nurses, essentially, well, the only jobs that would survive is genuinely blue collar jobs. So plumbing, electricians, builders, essentially contractors, these are the type of jobs that would survive, essentially construction jobs in general. Digital asset exchanges and brokerage firms are rapidly integrating sophisticated artificial intelligence agents to handle high frequency executions and customer service operations. Even people who work in crypto firms are now being replaced essentially by even people who work in crypto firms are now being replaced by AI agents. This technological shift represents a significant evolution in the financial plumbing, as platforms seek to essentially increase efficiencies and reduce the overhead essentially associated with manual oversight. However, The aggressive rollout of these automated systems is directly contributing to a steady rise in layoffs across the sector, signaling a transition where human intervention in routine market operations is becoming increasingly scarce in the 2026 digital economy. The trend towards total essentially automation highlights the several critical shifts in the national financial infrastructure. AI agents are now capable of managing complex global settlement layers with speeds that far exceed human capacity, leading to a utility era where efficiency is prioritized over traditional staffing models. The displacement of entry level and mid tier roles in compliance and support is creating a widening gap in the labor markets, forcing essential recalibration of skills required to maintain a modern digital on ramps. Prominents argue that AI driven systems provide a more robust defense against market volatility and potential banking blockades, as these automated agents can now respond to data inputs in real time without fidgetive or emotional basis. As the industry continues this transition, the focus remains on the long term impact of AI on the stability and transparency of the ledger. While the Genius Act and other regulatory essentially frameworks like the US Clarity Act emphasize the technological essential leadership, the human cost of this innovation is becoming a central theme in policy discussions. Analysts essentially suggest that the 2026 global economy will need to find a balance between high speed benefits of artificial intelligence and the need to preserve a sustainable workforce within the broader financial landscape. Now, a few things to unpack on that. Yes, the world is going more digital. Yes, a lot of people will be losing their jobs. How can you keep a job in a world that's rapidly going towards AI, essentially? How can you keep your job? By learning about AI, by understanding how to utilize AI into your everyday work. It's the only way, pretty much. If you have kids that are studying right now, the best line of work for them would be to go towards AI or blockchain developments because that's the only two jobs that will survive. Or they can go towards blue collar jobs as well. That's the ones that will survive as well. Also, what happens to people that do end up losing their jobs? What happens if the world goes full AI mode? What are people going to do? How are people going to make a living? How are you going to pay your rent? How are you going to be able to buy food? How are you going to survive or drive a car? Well, the idea is essentially, Europe, give us a sense, or trying to give this a sense about 4 years ago of what the idea is going to be. But it's about you getting paid by the government a certain wage in CBDC money, which is tracked, which is programmable, which means if you don't jump high enough, they can, essentially switch it off. And as ridiculous or funny, Hollywood that may sound, it's all reality. And as I said a long time ago, if you're not prepared for this digital world, which is getting closer by the second, with everything going on right now, nobody's focused on CBDCs. Everybody's very focused on the war in the Middle East. It's a big deal what's happening in the Middle East as well, to be fairly honest. Removing a cancerous regime from Iran, it's very important to do that. But other than that, there's a lot of things happening inside a CBDC world right now. Europe is going heavily towards retail CBDCs. Now they're talking about everyone should be using CBDCs. They're trying to get cash points, ATM machines in the CBDCs on a daily basis. People can use it on their bank cards and get money sent from. Or essentially, we have Bank of Korea yesterday talking about CBDCs. We had the Bank of Belgium the day before talking about CBDCs. Today, we also have China's banks talking more about CBDCs. There's so much happening in the world right now that some people might not realize that even though there's a massive war going on in the Middle East, and some people think we're not moving as much inside the crypto sector, we're definitely moving at a rapid pace towards an AI and a CBDC world. It just might not seem that visible because there's so much happening at the same time. Now, SEC is what we're going to talk about next on tonight's live show. Before we talk about the SEC, let's go to the comment section first. Let's see what's happening there, and then we'll go straight to the next news. So let's see where we were at. We were here. But XRP, good to see how you're doing. Free very good to see how you're doing. Kelly, good to see how you're doing. Scott, good to see you, brother. How you doing? Share the live. Let's go, Scott. Remember Miles' Substacks. Let's go, Scott, for saying that. Yep, definitely check out the Substacks. If you haven't checked out my Substacks, definitely go and check them out. I release one article per day, and it breaks down everything you need to know about what's happening around you. Didn't see that one coming at all. You've been saying it for years, only a matter of time regarding a CBDC world. Yep. Hi, Miles and CMF. Hope everyone is good. Ronnie, good to see you, brother. How you doing? Now, SEC. We talked about the Nasdaq going digital as well in terms of tokenization. A $1 trillion market space getting tokenized is a massive deal. SEC approves the Nasdaq's move to allow tokenized security trading. The SEC has officially granted the Nasdaq the authority to host the trading of tokenized securities, marking essentially a major milestone in the modernization of national financial infrastructure. This was essentially on CoinDesk today. This approval allows the exchange to move beyond traditional equity formats and integrate essentially distributed ledger technology directly into its primary matching engines. By providing a regulated environment for these assets, Nasdaq is establishing a high utility bridge between conventional essentially capital markets and the 2026 digital economy, effectively streamlining the issuance and settlements of digital native instruments. The move is expected to fundamentally transform how investors interact with institutional grade assets. Real-time settlement capabilities. The integration of the ledger into the Nasdaq operations aims to eliminate the multi-delayed, essentially delays of legacy financial plumbing and move towards essentially a much more fast, rapid settlement. Fractional ownership and accessibility. Tokenization allows for essentially divisions of high value securities, creating essentially a more inexclusive on ramp for broader range of participants who were previously limited by high entry costs of legacy systems. Which means if you were in the past, wanted to buy a certain asset essentially, and you were limited due to your funds of how much you could potentially buy. With it being on the blockchain, it's tokenized, which means you could buy a fraction of that asset that you pretty much couldn't do in the past. By utilizing automated smart contracts, the exchange can break regulatory requirements directly into the assets themselves, ensuring that all trades align with oversight standards envisioned in the US Clarity Act. Market experts view this development as a significant validation of the utility era. As one of the world's largest exchange operators and essentially adopters the core principles of the Genius Act, the transition suggests that the future of global commerce will increasingly rely on unified settlements layers that essentially combines the reliability of established institutions with the efficiency of modern technology. As the Nasdaq prepares to list its first batch of tokenized products, the focus remains on how other international exchanges will adapt to this new standard of 24/7 high speed digital asset trading. The SEC just approved the Nasdaq to go ahead with their essentially tokenization project. $1 trillion market space. Wall Street is about to get tokenized. It is absolutely huge news for the crypto space. Absolutely huge news. And it just, it goes back to again 3 years ago when I used to do TikTok lives for the CMF live show. When I told people, people used to ask me, should I buy gold? Should I buy silver? Should I buy a property, for example? And I said, you're better off going for essentially the crypto space. Because I said a market, if anybody remembers my exact words, I said a market space this big, 4 years ago, I said a market space this big is going to revolutionize every other market around. It's going to revolutionize the real estate market. It's going to revolutionize the stock market. It's going to revolutionize the automotive industry. It's going to revolutionize every single market around you. And you fast forward to now, the biggest market space in the world is about to get tokenized. Wall Street is about to go full tokenization mode. And it's been approved. Now, Visa. Visa is again taking another step inside this blockchain world. So, Visa and Tempo launch a new AI-driven payment tool for digital assets. Visa and fintech firm Tempo have partnered to introduce a suite of advanced payment tools that integrate artificial intelligence with blockchain technology. This collaboration aims to streamline how consumers and businesses interact with digital currencies by automating the conversion and settlement processes, by embedding these essential intelligence systems into existing merchant networks. The partnership is creating a more initiative, essentially gateway for the 2026 digital economy, allowing essentially the faster transactions that feel as seamless as traditional card payments. The integration of these technologies focuses on enhancing the efficiencies of modern financial infrastructure. Smart conversion essentially engines, the new tools use AI to analyze market liquidity in real time, ensuring that users receive the most favorable rates when moving between fiat and digital assets without manual intervention. Automated fraud detection. Advanced machine learning and algorithms provide a sophisticated layer of security, monitoring essentially transactions on the ledger to identify and block suspicious activity before it can impact the broader network. And seamless merchant essentially integration. By utilizing standardized APIs, the platform allows retailers to accept a wide variety of digital tokens through their current terminals, removing the technical hurdles that previously hindered widespread adoption. As the essentially AI enhanced tools become more prevalent, they represent a significant step towards the utility era of finance, where the underlying complexity of the technology is hidden from the end user. Industry analysts suggest that this move aligns with transparency and securing goals often discussed in emerging regulatory frameworks, providing a robust foundation for global commerce. The success of the Visa and Tempo partnership may serve as a blueprint for how legacy financial institutions can successfully merge their established reach for an initiative potential decentralized system. So, Visa and Tempo coming together to advance the crypto space using AI technology, using it for payments. Once again, essentially, Visa and MasterCard have taken so many steps inside the blockchain sector to basically survive inside this blockchain sector, to have a place inside of this block, or foothold, you can pretty much say, inside this blockchain sector. And to be fairly honest, they have done tremendous work. There are two companies that adapted so quickly in the blink of an eye. Much, much can't be said for the rest of the companies around them. Now, the UK is what we're going to be talking about next. The UK has sanctioned a Iranian crypto exchange. So far, Iran, the Islamic Republic of Iran, has missiled UK essentially bases in Cyprus, and Keir Starmer's response to that, the Prime Minister of the British people, his response to that was, I couldn't care less that our bases are getting hit. The only thing he did was send HS Dragon, essentially, that it still hasn't arrived as far as we are aware. He's basically done nothing except sanction an Iranian exchange, as if that will be achieving anything. The United Kingdom's Office of Financial Sanctions and Implementation has taken a decisive action against Zidongs, a digital asset firm accused of listing financial operations for the Islamic Revolutionary Guard Corps. You know what's funny about that? That is the IRGC, which essentially is a terror group that uses cryptocurrencies for malicious activity, terror activity, in other words. And the IRGC has been put on the list of the terror list by the US and the EU, not the UK. But the ironic part about this is the UK is banning a crypto exchange that's linked to the IRGC because of what the IRGC does with the money, but doesn't have the spine to essentially, or the backbone. Keir Starmer doesn't have the spine or the backbone. He's a little weasel. He doesn't have the backbone to put them on the list of terror, but he would sanction an exchange that's linked to them. If they're not bad, I mean, it's just. This regulatory move marks a significant escalation in the use of targeted sanctions to disrupt the flow of capital through alternative settlements and layers that bypass traditional oversight. By blacklisting the entity and its associated digital, essentially wallets, authorities are attempting to close a perceived loophole in the national financial essential infrastructure that is being used to fund destabilizing activities. The enforcement action essentially highlights the rigorous monitoring of global transactions within the 2026 digital economy. Identification of illicit flows. Investigators utilized and advanced on-chain analytics to trace funds between the exchange and state-sponsored entities, providing a level of transparency that aligns with the security goals that essentially of modern regulatory frameworks. The sanctions requires all regulated firms to immediately halt any dealings with identified addresses and creating a firm barrier intended to prevent the movement of assets into a broader global banking system. This crackdown is a part of a coordinated effort with global partners to ensure that decentralized technologies are not utilized as a tool for envision or financing of conflict. As the UK government tightens its grip on high risk platforms, the focus remains on protecting the integrity of the digital on ramps used by legitimate participants. Analysts suggest that this case will serve as a precedent for how the US clarity and similar international laws are applied to combat state sponsored financial activity. Moving forward, the industry is expected to see a greater emphasis on know your transactions and protocols to essentially ensure that the efficiency of the ledger is not compromised by entities seeking to operate outside the boundaries of international law. At this point, we don't know if the UK government is doing this, essentially, if Keir Starmer is doing this just to show that, they are against the Islamic Republic of Iran, the IRGC that creates terror groups, and they're thinking, if we show that we're going to ban this crypto exchange, that would show that, we are against them. Because we all know for a fact that the City of London is the capital of money laundering. It's just well known for that. But ironically, they still won't put the IRGC on the terror list, but they'll ban a random crypto exchange to show support. Yet they won't show support to Donald Trump when he needs it. Now, China is what we're going to talk about next on tonight's live show, but it also does go back to what I said a while ago before this war, that Iran's government uses cryptocurrencies to money launder. They've been using it for the longest time. The cheapest place on planet Earth to pretty much mine Bitcoin is Iran. It's just well known as that. And how they do it is they use electricity illegally by taking it from their own people. So and for a lot of people that don't know this, Iran during the day doesn't have electricity for 4 hours suddenly. So imagine if you lived in Iran, and for all the Western people, that essentially, not everyone, but all the liberals in the West who advocate for the Islamic Republic of Iran for being some sort of saints and treating their people with respect. You can't do basic things in Iran. And putting aside, you can't wear shorts on a sunny day and you can't have a beer on a sunny day. Just simple, basic things. I'm not going to go too extravagant, essentially, just basic things. But putting that to one side, for 4 hours in a day, you wouldn't have electricity in Iran. They'll just cut it off. And in some cases, the electricity is actually being used by family members of the Iranian government to mine Bitcoin. And we're not, this could be during essentially summer when it could get to temperatures of essentially 40 plus. Imagine being at temperatures of 40 plus and you don't have AC, for example. Just basic rights. You don't have AC in temperatures of 40 plus because the Iranian government's family members are trying to mine Bitcoin. So, and they've been doing this for the longest time, essentially. But, all the liberals in the West don't know about this. And if they did, they're still, not all there, to be pretty much honest with everyone. But that's essentially how it is living living under a dictatorship. The ironic part is they did a study test in the US and they said, who would you rather live under, Donald Trump or the Islamic Republic of Iran? And every single moron said the Islamic Republic of Iran. While as under Donald Trump, you have electricity, you have AC, you can wear whatever you want, you can drink whatever you want, you can say whatever you want, you can protest about whatever you want. But you can't do any of those in Iran. Yet those morons all said it was better to live under the Islamic Republic of Iran than it was to live under Donald Trump. It just really shows you how much the world is brainwashed. Also, it does show you how much essentially Iran has embedded itself in the West. It's been shown that there are many professors in the US, in the UK, in Canada, even in Australia, that are Iranian government members. Their fathers or their mothers are a part of the Iranian government, and their kids have become professors in these Western nations. So you could tell where the brainwashing started from in these Western countries when their professor parents are a part of the Iranian government. That is why we have so many liberals who are essentially in the West, who are essentially in favor of the Islamic Republic of Iran because they were brainwashed by their professors. It's just there's a whole loop cycle about it. But anyways, that's essentially, with the UK taking one step to ban essentially Iranian crypto exchange, as if that's going to make any sort of difference. What they should be doing is back in the United States. Now, putting that to one side, let's talk about China. China expands digital yuan networks with 12 essentially new banking partners. The People's Bank of China has significantly broadened the reach of its central bank digital currencies. As I said, there's so much happening in the world right now, and CBDCs, there's so much happening in that sector too. By integrating 12 additional commercial banks into the national network, this expansion essentially marks a major step in scaling of China's national financial infrastructure, moving essentially digital yuan beyond essentially its initial pilot phase into a more comprehensive retail and corporate environment. By bringing a more diverse group of regional and specialized lenders, the central bank is ensuring in China that in 2026, the digital economy has a robust and exclusive on ramp for both domestic transactions and cross border settlement layers. The inclusion of these new institutions focuses on enhancing the high utility functions, essentially, of the Chinese yuan ecosystem. The addition of a regional lenders allows the deeper penetration into smaller cities and rural areas, ensuring that digital currencies serve essentially as a reliable alternative to legacy cash systems and private mobile payment platforms. The new partners are essentially testing specialized programmable money features such as automated escrow services for real estate and targeted industrial essentially subsidies that ensure funds are used for intended purposes. This wave of integration emphasizes the unified technological standards, allowing different banking apps to communicate seamlessly across a single transparent ledger as envisioned in the broader goals of modern essentially financial oversight. As the yuan's network grows in China, essentially, the focus remains on its potential reshape of international trade and essentially reduce resilience on traditional, essentially global banking systems. Analysts suggest that the continued expansion of the digital yuan serves as a blueprint for other nations considering their own sovereign digital essentially assets, which is absolutely facts. 4 years ago, I said on TikTok Live, essentially, if you want to know where your country is headed, look at China. China was the only country with CBDCs. China was the only country essentially with social credit systems in testing phases. China was the only country essentially that was talking about 50-minute city ideas, programmable CBDCs, switching off your CBDC, pausing your CBDC. China was the only one that was thinking about it. And I said to everyone, if you want to know where your country is headed, look at China with the digital ideas and everything else that's coming. Before, essentially, after during that time, no other country was talking about CBDC, stable coins, or digital ID. After that, now you fast forward to 2026, everybody's talking about CBDCs, retail CBDC, wholesale CBDC, digital IDs, social credit systems, carbon footprints, and so on. And now, in 2026, March 19th, analysts are telling people if you want to see where your country is headed, look at China. March 19th, 2026 is when analysts are telling people, today, analysts are telling people, if you want to see where your country is headed, look at China. 4 years ago on the TikTok Live, I said that. I'm not exactly, and just to be pointed out, I'm not trying to say that to be cocky in any sort of a way. But what I am trying to say is tune into these live shows so you have a better idea before anything happens. Now, moving on essentially from China and essentially how much essentially they have advanced inside the digital sector and how much essentially now they're even trying to push their CBDC into rural areas in China as well. And China was the first one to create essentially a smart CBDC is what they're calling it, because they said a lot of people wouldn't have a smartphone, for example. They could be in the older generation and they might not have a smartphone. So China created a 6G SIM card for CBDCs, a 5G SIM card for CBDCs, a 4G SIM card for CBDCs, a 3G SIM card for CBDCs, and a 2G SIM card for CBDCs. So everybody's on going to be on essentially everybody's going to be on CBDCs. Nobody's going to be getting on out of CBDCs. And it was a running joke as well in the West. People said, "Oh, if they're going to introduce CBDCs, I just won't buy a smartphone anymore. I'll just use a Nokia phone essentially from 25 years ago." Well, unfortunately, that Nokia phone can also accept CBDCs. Now, XRP is what we're going to talk about next on tonight's live show. And the point of that is essentially just prepare for a digital world. The idea of going against a digital world is just a losing battle because it wasn't decided 2, 3, 4 years ago for the world to go digital. It was pretty much decided about 1998 for the world to go digital. 1998 was essentially digital e-money 1 and e-money 2 was essentially what was being discussed in 1998. That's when it was discussed on having this feature of blockchain technology and so on. It wasn't discussed 4 years ago when Bitcoin popped out of nowhere. Everything in this world that happens on a large scale is pretty much pre-planned. It doesn't happen suddenly unless you're Donald Trump. Donald Trump is the only man in this world that just ruins these high-level people's plans sometimes because he just goes on, whatever he thinks is right. Other than that, everybody else is very coordinated and organized. That's what we can tell what's going to happen next. But Donald Trump being unpredictable makes it fun for the market space because it keeps the market on edge. Now, Evernorth is what essentially we're going to talk about next on tonight's live show regarding XRP. But before we do that, let's go to the comment section first. This was happening there. We were at here facts. I remember those TikTok lives. Let's go Ray regarding me saying, everything's going to tokenize as a little market space. Hi wasn't Hi. Why hasn't America won the war yet? They've pretty much eliminated every person. There's about 4 people left from the high-ranking, essentially Iranian government. Nobody wants to take those positions anymore because they're too afraid of being taken out. So there's not much left, I'll be very honest. They're cleaning up pretty damn quick, to be fairly honest. The Americans are winning at a rapid pace, believe it or not. Extremely fast pace. The circus freaks from the West always doing too much. Maybe switch them with the freedom lovers. Facts, absolutely facts, what Ray has said. Now, Evernorth. Evernorth essentially integrates XRP for enhanced treasury management and cross-border liquidity. The institutional treasury firm Evernorth essentially has announced a strict integration of XRP into its liquidity management framework, signaling a major shift in how corporate capital is deployed across 2026 digital economy. By leveraging the asset's high-speed settlement capabilities, Evernorth aims to optimize its internal essentially financial plumbing and reduce the friction associated with traditional multi-day banking transfers. This move establishes a high utility on-ramp for corporate treasuries to access global settlement layers, allowing for near-instant essentially movements of funds without the capital inefficiencies of the legacy systems. The adoption of the XRP essentially by major treasury firms highlights the several essentially advancements in national financial infrastructure. The integration allows essentially Evernorth to minimize the need for pre-funded accounts in foreign jurisdictions and freeing up working capital that was previously trapped by dormant segments of global banking systems. By utilizing leverages essentially the ledger's native efficiency, the firm can execute high-value cross-border payments with a level of transparency and speed that aligns with the rigorous oversights of essentially of standards of the Clarity Act. Also, the shift towards digital native settlements eliminates many of the intermediary fees charged by traditional correspondent banks, providing essentially a more resilient and cost-effective foundation for international commerce. As Evernorth scales this implementation of the focus, it remains on the broader institutional acceptance of digital assets for routine balance sheets and managements. Analysts suggest that this partnership serves as a practical application of the principles found in the Genius Act, demonstrating how distributed technology can modernize the world's financial architecture. Moving forward, the success of this integration could encourage other large-scale enterprises to move away from essentially traditional banking sector to much more digital interference. Evernorth XRP is something that has been discussed in the past, but apparently they're taking more steps essentially towards XRP, which is brilliant to hear, which means the first steps they took towards XRP must have been extremely smooth for them to essentially scale even further in XRP. Now, institutional momentum also is shifting as XRP treasury strategies and Bitcoin ETFs gain ground. The financial landscape of 2026 is witnessing a significant convergence essentially between digital assets and traditional wealth management. As Morgan Stanley, for example, prepares to expand its Bitcoin ETF offerings, this move provides a regulated on-ramp for broader class of investors, signaling that national financial infrastructure is increasingly accommodating decentralized settlement layers. By integrating these products into their core advisory services, major institutions are moving away from the restrictive policies of the past and embracing their high utility potential of modern, essentially digital economies. The shift towards professionalized digital asset management highlights several key developments in global financial planning. The emergence of specialized treasury strategies for XRP, for example, allows enterprises to manage liquidity with unprecedented speed, reducing the capital drag associated with legacy banking systems. And also, for example, in Bitcoin's case, Morgan Stanley's preparation for Bitcoin ETF expansion suggests a growing demand for transparent and SEC compliant exposures to digital assets and markets, aligning to oversight of goals of the US Clarity Act. Standardization of digital holdings. As the traditional banking sector and firms adapt to these tools, the industry is seeing a move towards the unified ledger standards envisioned by the Genius Act and fostering a more resilient global commerce environment. As these institutions and initiatives scale, the focus remains on long term impacts, bringing trillions of dollars in traditional assets essentially into the digital asset ecosystem. Analysts believe that the combination of corporate XRP adoption and widespread ETF availability will provide the stability necessary for the next phase of market growth. This transition represents a fundamental bridge between established world of finance and the innovative efficiency of 2026 global economy, ensuring that the world's financial architecture is ready for a more interconnected and automated future. So the two assets analysts are focused on right now is one Bitcoin, two XRP. Those are the two assets that analysts are focused on right now. Long time it used to be Bitcoin, essentially Bitcoin and Ethereum. Now it's Bitcoin and XRP, and one day it will just be the most focus is on XRP. I mean, we all knew this was going to be, you could pretty much say XRP's year going forward because it's all about regulations and so on. And also, CNBC Squawk stating that this is XRP's year 2026. It's not Bitcoin or Ethereum's year, it's XRP's year. And we can see that happening when analysts are now essentially from the Wall Street sector are saying our main focus is Bitcoin XRP pretty much right now. On that note, we have reached the endings of tonight's live. If you're watching this for the first time ever, this is the CMF Live Show, stands for Crypto Mouse Family. My name is Miles. You can tune to this live show Monday to Friday, 10 p.m. long time onwards. For the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations, pretty much all the information you should know about regarding the world complete turning into a digital space. If you haven't read my Substacks, go and read my Substacks as well. Also, I'm thinking about introducing a new idea to my Substacks. I'll keep everyone informed on that. The disclaimer of this live show is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, tomorrow, March 20th, is going to be the Persian New Year, which dates back all the way to the Persian Empire, which is about 500 years before Jesus Christ, essentially. So, tomorrow's Persian New Year. 20th of March essentially is the beginning of the Persian Year. So, therefore, I won't be able to do the live show tomorrow because due to the Persian New Year, I'm going to be spending it with my family. So I'm hoping everyone tuned in tonight. If you didn't, essentially everybody's at the CMF right now who's watching, retweet and share this live to the CMF to everywhere where you want, so people get to watch this. So which means I will be seeing all of you on Monday. So I hope every single one of you have a great weekend, essentially. I'll be seeing all of you on Monday. I hope every single one of you have an amazing weekend. And before we go, let's go to the comment section first. Let's see what's happening there. But like, comment, retweet, share, subscribe, follow if you already haven't. If you have, thank you so much. Let's see where we're at. Great life. Take care, Miles and Samuel. Let's go, Ray. See you on Monday, same time as usual, brother. Have a great weekend. Great info as usual, Miles. Thanks, and see you on Monday. Let's go, Shelly. See you on Monday, same time as usual as well. Miles, I was late on, but thanks you again. I'll watch the whole block tomorrow. Let's go, Addy. See you on Monday, same time as usual, brother. Happy New Year, Miles. Have a great weekend. Let's go, Comatose. See you on Monday, same time as usual as well. Happy New Year. Thanks, Miles. Let's go, Stormy. See you on Monday, same time as usual as well. Enjoy your time off. You and everyone have an awesome weekend for sure. Let's go, Ray. See you on Monday, same time as usual, brother. I will see every single one of you on Monday. Same timing as usual. Good night, Miles and CMF. Thanks for great info. Have a great celebration, Miles. See you on Monday. Let's go. Free forever. See you on Monday, same time as usual as well. Um, if you're Persian and you're watching this, happy Persian New Year, and I hope you have an amazing time with your families as well. Good evening, Miles, and happy New Year. Let's go. Cali, see you on Monday, same time as usual as well. See you every Monday, same time as usual. Everybody have a great weekend inside the CMF. Love you all. See you on Monday, same time as usual, and happy Persian New Year to all my Persians out there. See you,